Hey, how's it going, everybody? In this video, I want to talk about life insurance policies options. So this is just going to be a short video over the different policy options life insurance has to offer. So what is the purpose of policy options? So it's basically giving the policy owner the right to make decisions about the cash value in the policy, as well as the return of excess premiums, dividends that should be invested, and how the benefit payments will be made. So there are different choices available to them are categorized as non-forfeiture options, dividend options, and settlement options. So that's what we're going to be talking about in this video. So the first one that we have is non-forfeiture options. This is pretty much choice. It's a choice that the policy owner gets to make on how to use the cash value in the policy. By law, the policy owner cannot forfeit the cash value and has the right to choose from 3 non-forfeiture options. So they can either do reduced paid up insurance, extended term insurance, or cash surrender value. So reduced paid up insurance. This allows the exchange of the cash value for a single premium whole life policy in a reduced face amount that provides the same length of coverage until death or age 100. So pretty much like it says, this allows the exchange of cash value. So you can exchange your cash value for a single premium whole life, which it's paid right there. It's all paid up. And so what that will do is it will reduce the face amount and it will provide the same length of coverage until the age of 100. So the next one that we have is extended term life insurance. This allows the exchange of the cash value for a paid up term policy for the same amount as the original policy. Of course, the coverage is going to be for a shorter period of time because it's extended term insurance. So the coverage is determined by the amount of cash value when the policy is exchanged. All right, cash surrender. So whenever the policy is over with, or somebody, the individual, the insured passes away, you can do a cash surrender value that allows the policy owner to cancel the policy and request the cash value in a lump sum. The cash value will be reduced if there is a surrender charge or an outstanding loan. So that's another option. So with non-forfeiture, we can either do a cash surrender. We can extend it. For a term period. So when we do the extended term, just remember that will give you the highest death benefit. Or we can do the reduced paid up, which is the largest coverage that goes all the way up to the age 100. So non-forfeiture options only apply to permanent life insurance. In order to have a non-forfeiture option, the policy must begin to accumulate cash value at least by the end of 3 years. All right, so the next policy option that we have is dividends. So dividends they're paid only on participating policies and are return of excessive premiums. So remember that dividends are not guaranteed and they're not taxable. So they are available when mutual companies issue participating policies. Participating policies pay dividends to the policy owner. The dividends are not guaranteed, and the policy dividends are a return of a overpayment of premiums and are not taxable. So we have to remember that. So what kind of dividends do we have? What kind of dividends are offered? Well, we have cash, we have reduction of premium, we have accumulation at interest, we have paid up addition insurance. Well, paid up addition, and then we have paid up insurance, and we also have a 1 year term. So cash. When you have a cash surrender value, when you have a cash dividend, the company will pay the dividend to the policy owner in a form of a check. So we have a reduction of premium. That's when the company will apply the dividend to the next policy, to the policy owner's next premium. So there's going to be a reduced amount of premium payment. So the dividend is applied to next year's premium. So there will be a reduced amount of premium payment. All right, accumulation at interest. Dividends are left with the company and earn interest. Dividends are not taxable. Interest received with accumulation at interest options is taxable. So as you can see, there are different things that you can do with the dividends. You can either get a cash, you can get a check, or you can do a reduction of premium, which is you pay, so you use the dividend money and pay for your premiums for the next year, or you can leave the dividend with the company and it will accumulate interest. So the dividends are not taxable, which is a great thing. You can also do a paid up addition. So the dividend is used as a single premium to purchase fully paid up additional insurance, and it's the same kind of insurance as the original policy. So that's another cool option that you can do. Paid up addition, yeah. So with paid up addition, the dividend is used to increase the face amount when it comes to that. And that's because it's used as a single premium to purchase fully paid up additional insurance. All right, paid up insurance. Dividend is used to pay up a policy early. So the paid up insurance is a policy dividend to shorten the payment period of a limited pay policy. We talked about limited pay policy in one of my videos called Types of Life Insurance Policies. So we talked about that before. So paid up insurance will help. So it's a dividend used to pay up the policy early. All right, so the last kind of dividend that we have is a 1 year term. So the dividend is used to pay additional insurance. So the policy owner uses the dividend as a single payment to purchase 1 year of term insurance. Okay, so it's used to cover an outstanding loan policy, outstanding policy loan, in case if the insured dies before the loan is paid out in full. So if the insured dies with the outstanding loan, the death benefit will pay the beneficiary with so the death benefit that we pay the beneficiary will be reduced by the amount of the loan. So the loan is going to take some of the death benefit money to get that debt paid off. All right, so the next thing that we have, the last kind of policy option that we have is settlement. So much like the other ones, settlements are choices that the policy owner makes on how the death benefit should be paid. The policy owner doesn't. So if the policy owner doesn't choose a settlement prior to the death of the insured, the beneficiary will be able to select the payment option or the settlement option. So, how can you get your settlements? You can get your settlements in cash, life income, interest only, or fixed period, or fixed amount. So, cash. That's a common thing that we're noticing with these options. We can get cash. The beneficiary will receive a death benefit in a one-time lump sum check payment. Life income. Now, I had something typed there, I promise you, but I didn't get it. For some reason, it deleted, so I'm just going to say it. Life income provides a income to the beneficiary, so there's no guarantee that the entire principal will be paid out. If the beneficiary dies too soon, they will have available as a single life or a joint or a survivorship. So let's see more about and this is one of the most important ones too. That's just so crazy. I had it typed out, I promise you. But life income options is also known as straight life, and this provides the recipient with an income that he or she can't outlive. So there's going to be an installment payment that guarantees for as long as the recipient lives, the amount. So there's going to be an amount that's paid out to them based off of the recipient's life expectancy. So that payment, the payment will be set by, the distributor who's hashing out those checks or the payments, and that's basically going to be based off of how long they think that the beneficiary is going to live. If the beneficiary lives for a very long time, the payments may exceed the total principal. However, if the beneficiary dies shortly after he or she begins receiving the installments, the balance of the principal is forfeited to the insurer. And this is because there is a chance that the beneficiary may not live long enough to receive all of the life insurance proceeds. The insurer makes options available which will provide at least a partial guarantee of some or all proceeds that will be paid out. So just remember with life income, under life income is straight life. This is a settlement option. The recipient cannot outlive the benefit payments. So, under the life income with a period or a certain period option, the recipient is pretty much provided the best of both worlds. in terms of having a lifetime income in a guaranteed installment period. So they're pretty much going to be getting paid until they die. Alright, so the next one that we have is interest only. Interest only are proceeds that are held by the insurer and can gain interest. So interest must be paid at least annually. Death benefits is not taxable to the beneficiary. Any interest earned on death benefit is taxable, however. There is temporary options for the beneficiary to decide how to use the death benefit. So the beneficiaries can request a full payment of the death benefit or a portion at any time. Alright, so the next one that we have is fixed period. There will be payments to the beneficiary for a specific amount of time. The company will decide that. And the company will decide, the insurance company will decide how much money is going to be in each payment. And within those payments, it's going to include the principal and the interest. Payments amounts will change depending on the interest earned, so that the total amount is distributed in a certain period of time. So the payments of the same amount, so basically the beneficiary is going to be getting a certain amount of payments on a certain, for a specific amount of time. So the length of the time will vary depending on the interest until the total amount is distributed. Alright, so the next one that we have is fixed amount. And this will provide the beneficiary with a lifetime of income. Yay! So we're going to talk more about fixed amount and annuities. So in the annuity section, that's going to be here on another video. So make sure you check that out. And with that being said, guys, this is pretty much the end of the video. If you have any questions, comments, concerns, just let me know in the comments down below. If you like videos like these, be sure to subscribe and hit the notification bell. So in this video, we talked about policy options. There are three main kinds. There are non-forfeiture, and then we have dividends and settlements. And with that being said, I'll see you on the next video. Peace.